Naliin Kayala Bagel Bagel Nyanga. That's our language, our unrivalled language, local language for this area. That's how we greet each other, and we do ceremony at the boundary of our country whenever we meet. And that's how smoking ceremonies and welcoming our neighbours has been used for a long time. See, our Kumameri country, the boundaries are from the Cooma River in the north to the Tweed River in the south to the foothills of the mountains in the west, Gumai-Barine, Tambourine Mountain, and all along the coastline in the east. That's Kumameri, Naringwal, Jargon, the country. We are saltwater people. We are known as the teredo worm-eating people, and it's a type of worm that burrows into the mangrove worms. And our old people used to pull it out, and they'd eat it like this. It's like an oyster. It's really yummy. Crabbing, fishing, oysters, all those things. That's what we enjoy here on our country. We've been dated here around 5,000 years with the university ANU. It's a long time to be on country. I haven't been here that long, but I've been here for a little bit. And I started my my apprenticeship here when I was 16. I built this place. I was only young then, but I'm back, and I'm welcoming all you fellas here, and blessing you as you stay on my country. And we only got one rule when you walk on our country, is to tread lightly. And one way that you might do that, you might see some rubbish, so you put it in the bin. And we've got a beautiful country. We like our country to look nice, you know. I've got a song here that I want to sing. It's a welcoming song. Garenge na na me joja mo beru no garenge na na me garenge na na me joja mo beru no garenge na na me joja mo beru no garenge na na me joja mo beru no gaya man marain jai gaya man marain jai jagun gun ganyang go Gaya man marain jai jagun gun gayang lo gareng na na me juja mo beruno gareng na na me gareng na na me juja mo beruno hup kui. The song that I just sing is Gurry, and it's a welcome song that I just shared with you people. And you might not have just witnessed what happened, but you're actually part of a ceremony, the smoking ceremony, the welcome ceremony. Now you can say that you've done ceremony with the local Aboriginal people on the Gold Coast, that you've been welcomed to our country. And how we say in our language, we say, Yana Jimbalang, which means goodbye for now, friends. Thank you.
Hi everybody, I'm David Whittle, the President of the Actuaries Institute, and I'd like us to express our appreciation for that very special welcome to country. So please join me in a round of applause for Uncle Max Dillon and for Kirralie Dawn and dancers. So, welcome to the 2024 All Actuaries Summit. I'm very enthused about this summit, and of course I'm greatly honoured to be here as this year's Institute President. So we know that the actuarial profession has a proud history. We live in a world that too often is driven by shallow thinking and quick fingers on social media, but we are the people who take complex long-term problems and solve them. For example, our pivotal and leading roles in life insurance, superannuation, general insurance, as well as leveraging our skills to use data for good, and as increasingly technology becomes more powerful and data more plentiful. And I think that our skills, allied with our professional standards and ethical framework, have never been needed more than they are now. I think that one of the greatest services we can render to society is helping to solve crucial long-term problems, such as the impact of climate change, such as intergenerational equity, funding for disability, and of course the role of AI. So to take the most pressing example, and I don't just say this because we're in southeast Queensland, although it's certainly very apparent here every summer in the headlines, climate change. As actuaries, we need to keep engaging with the implications of the science and to work out the insurance solutions and compensation packages that can make risk mitigation and meaningful transformation work. Our profession has already been doing that, for example, through the Australian Actuaries Climate Index, which measures trends in extreme weather events, and through the home insurance affordability analyses, which have highlighted the acuteness of the current situation in insurance. Intergenerational equity, another problem that needs evidence-based thinking across so many levels, the human needs, the incentives and education that are required to make things work, and the long-term financial outcomes which our skills are so uniquely positioned to describe. We've also seen the complex issues posed by disability insurance and the NDIS. Again, there are no quick fixes, but we actuaries have the rigorous training, the data skills, and crucially, the independence of thought to drive the long-term thinking that delivers maximum human and economic benefit for the most optimised cost. And finally, whenever we think about the problems of today and the future, our minds inevitably turn to the power and the dangers of technology, of big data, of AI, of machine learning, and increasingly of quantum computing. We've been working so hard in this space for years now, and I'd like to acknowledge the efforts of our members who have helped to lead some of the ongoing revolution in data usage and how people think about data. So this conference will showcase that we're not scared to take on the big issues. Just look at some of the plenaries for this week: the future of life insurance, the interaction between hereditary disease and insurability, how we can invest to think bigger and to live better, how to harness neuroscience for peak performance, how to make our homes safer, and rethinking the promise of insurance. And above all, we actuaries need to work with others, and we are keen to do that, and that is on show this week. Just the mix of actuaries and non-actuaries on our agenda highlights this great strength of ours, that we are keen to and able to work with professionals from other spaces and also with leaders of the community, government and industry. So to all the non-actuaries in the room, I'd like to say that we are excited and keen to work with you to make the world a better place. And to everybody here, I say, enjoy this week, take advantage of all the learning that is on offer, both in the conference sessions, but also crucially in the networking opportunities during the breaks. It's great to see you all here, and it'll be a wonderful week. So there's just a few other things that I'd like to call out now while I've got your attention. We'll have some slides in a moment, I think. So firstly, I'd like to take this opportunity to celebrate our 2024 Volunteer of the Year Award winners. And in particular, I'd like to mention the President's Award recipient, Alyssa Holtz, who has been recognised for her leadership and dedication as the Chair of the Education Strategy Committee from 2020 to 2023, this utterly crucial part of what we deliver for our members and for our role in the community. So please join with me in congratulating all the recipients. Today, we are also very proud to launch our Chief Executive Women's Scholarship that offers one Australian working in data science the incredible opportunity to study a leadership course at Stanford University, INSEAD or Said Business School. Lisa Green, an inspirational data and AI executive at Telstra, won the scholarship last year and will be attending Harvard in the next few months. And she'll be presenting in Plenary 4 this week, Digitisation and Your Consumer. That's on tomorrow. We encourage you to apply, so please go to the CEW website and check out this opportunity. I'd also like to make a big thank you to all our 2024 partners. We very much appreciate your support, and particularly to our major partner, EY. I also want to give my personal thanks and also thanks on behalf of all of us to the organising committee for this event. Much time and effort is needed from the committee to produce an event of this quality and scale. Thank you to Douglas Isles and the exceptional team. I'm looking forward, as we all are, to attending sessions and working our way through the sensational program that you have created. Now, I'd also like to take this opportunity to remind you to please attend the Institute's annual general meeting. This is not glamorous, but it is important, and it's on at 8 a.m. tomorrow morning in Room C. So we look forward to seeing as many of you as possible there. Now, just some final housekeeping from me. I'd like to point out that this centre, the Gold Coast Convention and Exhibition Centre, is a non-smoking building, but there are designated smoking areas on the external terrace areas. There are emergency exits in this room, which are under the green signs up the back. If the emergency alert tone sounds, I won't describe it to you, you'll recognise it, but please follow the instructions. And then we navigate to the nearest emergency exit door and proceed to the emergency assembly area. This all sounds very exciting, except that we're all hoping it won't happen and expecting that it won't. So with all of that, it's now my great pleasure to declare the 2024 All Actuaries Summit open. And so without further ado, I'd like to now introduce you to Win Lee To, who's the chair of our opening keynote address. Win Lee is the Senior Vice President of the Actuaries Institute and is also a principal at Taylor Fry. So Win Lee, over to you.
Thank you for that welcome, David. It is my pleasure to introduce Anne Sherry AO, our keynote speaker for today. Anne needs no introduction to a lot of you. She's one of Australia's leading business executives with a career that spans government, banking, cruise tourism, as well as being an active philanthropist supporting opportunities for Indigenous Australians and for women in STEM and sport. Please join me on stage, Anne. Thankfully, this is not as intimate as it was before, to be hugging each other while we're speaking. So I'm very thrilled to have you here, Anne, to launch our conference theme on thinking bigger and living better.
And thank you for having me.
Thank you. So without further ado, we all want to hear from Anne. So let's start with, as a non-executive director with an impressive suite of roles, from charities to ports and airports, banks, even tech and AI marketing, you'll always need to be thinking bigger. What key issues are top of mind for you and for directors right now, and how do you keep on top of so many risks?
So morning everyone, and thank you for having me. And I would also like to acknowledge the traditional custodians of the land here and pay my respects to their elders. Look, that's a big question. And here we are on the Gold Coast. I chair Queensland Airports, and yesterday Bonza went into voluntary administration. So today, changes in the commercial world around us are, one of the key things, because there are whole industries being remade, reshaped, and obviously travel and tourism is one of those, and airlines in particular. But if I lift it up a level, ESG is clearly a very key issue across every sector that I'm involved in, I think all sectors. And we talk a lot about the E and how we measure environmental impact and supply chain impact, but the S is just as big. And we don't talk about that as much, because those risks are the risks you see playing out in, for example, the shift in sentiment towards food retailers. That's an S issue. And it's shifted very quickly, it's moved really quickly, and I'm conscious of that, particularly wearing my banking hat, but other retail hats as well. And then the G issue is also, you can see that shifting fast as well, where what's expected in governance, who the world thinks make good directors. Should people stay 10 years? Should they move more quickly? Is the world moving too fast for people to set and forget their directors? So I think ESG as a total cohort is probably the dominant risk everyone is thinking about. But then sitting alongside that clearly is the impact, the change in tech. And how fast are our systems? I sit on a bank board. All of the banks in Australia still sit on old mainframe systems, by and large. We've got lots of new stuff that hangs off the side of it, but tech is a big risk. Scams for customers, incursions. We've got thousands of attempts every day to break into the systems in banks to get hold of data, and that happens to every company. So that issue about, are your firewalls sustainable? What are your old systems doing? Do you really know what's there? I'm Chancellor of a university. We did have a hack into the university system just before Christmas, a year and a half ago. And the entry point was a printer.
Goodness me.
Because academics and students still had access to remote printers. To printers remotely. So a fail in a piece of printer software was the entry point. Fortunately, it didn't get into all of the systems, but it got into a system that was important. So I think that tech space is big. And, do we all have competence to think about that? Do we understand what's going on? It's so complex. I've got board papers for NAB next week. There's 100 pages on status of tech, which I just go cross-eyed reading. But it's, that's serious. And then off the back of that, of course, there's some of the issues you're all going to be talking about, which is AI, the use of data. Is it reliable? Who uses it? Who gets it? How is it interpreted? Do you do it manually? Do you do it with people? Do you do it through the generative AI capabilities? So I could go on and on, honestly. So the stuff that keeps me awake at night is substantial. And then I'm also chair of a business that's got quite a lot of its operation in the US and Europe. And their legislative changes are faster and sharper than many of ours. We feel hard done by with our regulations, but in a European and European context in particular, the regulations and the legislation shift fast and hard and lockdown.
For the better? Or?
Well, I mean, it depends who you ask, probably. For most businesses, we would always say it's too much, too hard, too fast, because it costs money and you've got to do this and so on. But they would say we've got to protect our citizens from privacy incursions, data incursions, etc. And of course, in the US, just political uncertainty. I had a presentation earlier this week. There are 4 billion people around the globe who vote this year on changing governments. And that's everywhere. India's underway now, US, UK. There's the scale potentially of the change that could bring to a global economy and global politics is very significant. And so if you've got businesses that are operating in multiple jurisdictions, that's a risk. Okay. So I'll stop there before I give everyone a headache.
No, you don't give anyone a headache. It's all terribly, well, both scary and inspiring, I guess.
Yeah.
So you've talked about AI, tech, data. Actuaries are at the forefront of all of this. So what AI and data science sort of transformative outcomes have you been observing? How do you think actuaries can harness our skills in this area, and what should we be really cautious of?
So I think there's so much positive but so much negative operating simultaneously. And because it's largely unmapped, I watch it play out in both directions, and I'll come to the actuaries piece of it. So on the positive side, you can see the power of pulling together information, particularly to customise offers to individuals, to actually understand what people really want instead of everything being mass mailed out or mass offers, or from consumer point of view in particular. What is it people need? How can you understand need? How can you see vulnerability? How can you use data in that way? So if I use a banking example, we can see vulnerability start to emerge. You can see when people are chocking up on their credit cards because they can't afford something, or paying things using credit that previously they had enough cash to pay. You can actually see those trends, and that stuff can be worked through with an individual then to say, we can see. Sometimes we ring people and say, we can see you're starting to get into difficulty. And they go, no, I'm not. And then a month later you ring them back and they go, yes, I am in trouble. So, we can see that. So it can be used as an indicator where you can help people and intervene early, rather than waiting until they can't pay their mortgage and then they're seriously in trouble. So you can see it in that context. On the negative, you can also see the way data is used to pump stuff to people who are vulnerable, or who maybe shouldn't be buying a product, or where it's unsuitable for them, but they've been identified as... and scams are the classic in that. So when people are scammed, the same people on average, the most vulnerable people to scamming, are scammed then 5, 6, 7 times. So it's not that everyone gets scammed, it's that the group that gets scammed are identified, and then they go again and again and again, because they can't bear to think that someone's taking advantage of them, or that they were so stupid to do something. That's that terrible human emotion of, I can't believe I did that, so it must be wrong, it must be okay.
You once mentioned to me that insurers have something to learn from scammers, that they can emotionally tap into people's
The scammers know
minds,
people's emotions better than any of us.
And insurers
honestly.
can't get people to open a one-page PDS, So
if we could learn their business model and do it better, they are the best.
Yeah.
They have a business model that identifies what motivates people. And they get them to do things that none of us could do in our businesses. And it is a very, we're looking at this a lot because there's something about knowing people's motivators. And they've worked it out. That's their business model, is they've worked out what motivates people. Who would contemplate giving money to someone who's claims to be a Nigerian prince? Who would give money to someone who sends them an email saying, if you don't give it to me, I'm going to be killed in whatever country I happen to be living in? Who knows what motivators are for people saying, I'll give you 12% on your, get your money out of your bank because they're only giving you 3%, I'll give you 12%. Who knows that motivation? So the scammers are so clever at not just having lots of offerings, but actually knowing who to target it at. And most of us in our businesses still do mass mail outs to everyone as though everyone's the same. Everyone who's got our product must be the same. Everyone who insures with us is the same. Everyone who has superannuation with us is the same. It's just not true. And they're nuanced. And that's where data could be powerful, and it is powerful for evil at the moment. And we haven't worked out how to make that work better, I don't think, how to optimise what we do, whether it's insurance or super or banks or any of us who are using data. We just haven't worked out how to optimise what could be offered to people and what could be good. And I think that's the opportunity. And I think also the challenge for many of us now is that there's such a bifurcation between the young and the old. So, for many of us, our primary customers, our most valuable customers, are people for whom this is complete gobbledygook. And the younger generation coming through will expect nuance in everything all of our businesses do in ways that most of our current customers just don't. Most of us grew up thinking insurance price is an insurance price, or what you get out of your super fund. You can shift funds maybe if you can be bothered, or your bank. What you can shift your bank if you want, if you can be bothered. But most people don't.
So you're saying that the nuance and I've got actuaries in my mind, obviously.
Yeah.
A customer is at the forefront.
Yeah, I think that's going to be very challenging. And also it's got to be more forward-looking.
Yeah.
The other piece of this is that data, when it's used well, is predictive. And this may be just my view of actuaries, but I guess my experience of actuaries is using the past as a predictor of future performance or future activity. I'm just not sure that's true anymore. And the challenge of, yes, there's historical data, and of course climate data is a classic. The science says the rate of change is accelerating at pace. And if I hear one more person talk about, and having just moved to Brisbane, this is another 100-year flood, and I've been around long enough. My parents' house disappeared in the 70s in Brisbane. My sister's house disappeared in the 20-something or other, and somebody else's house disappeared. In fact, my original house in the 70s, where we lived, has gone under 4 times since the mid-70s. And that was the 1 in a 100-year flood that has happened 4 times in the last 40, 50 years. Yeah. So that's, that you go, wow, how does that work? Yeah. So, and then of course the outcome of that is that's a house in a really well-established inner suburb in Brisbane, and it would be uninsurable now. And so where does data, judgment, insurability, decisions about where houses, how does all of that come together? Because the other piece of data is, and particularly generative AI, is it can pull multiple data sources together really quickly. Most of us have operated in very siloed and segmented worlds. People who decide what land is released, where houses are built and what sort of houses, how much insurance costs, all of that's been done completely independent of each other. And then climate predictions have been done over the top of all of that, completely independent of all of that as well. So how do you pull that together under the umbrella of, whether it's insurance data, how does that come together? And not after the event, but before the event. Yeah. In listening to the intro, I was thinking, where's the voice of actuaries on the release of Sydney is, land around the river in Camden, which is about to happen in New South Wales. That land floods. Everyone knows it. Yep. They want to build houses, though, because it's cheap. It's cheap land. Yep.
I think there's a rallying call for actuaries, actually. We all know that, but it's a question of how forthright are we in being fearless in saying, what we already know.
Well,
and-
think
and-
better, live,
yeah.
think bigger.
Think bigger,
There's
live
something
better.
about everyone getting out of their boxes. Because if we all stay sitting in our boxes, this mess is going to continue.
Yep.
And then something else will come in over the top that will completely disrupt it. And whether that's quantum compute, the capacity to have quantum computing analyse more data than everybody in this room currently holds in seconds will completely disintermediate the sort of work that you do. So I
Hopefully
think
we
that's the
still
challenge.
need the critical thinking that goes... hopefully there's a real intelligence that drives the artificial
No,
intelligence.
well, I
and
agree with
actuaries
that. And
are
I
within
think
this.
human judgment, but also you've got to be prepared to let go of the ownership of component pieces and look for the whole. Because I think as a community, that's what more people are looking for now. There's less tolerance, and this is the S in ESG as well. There's less tolerance of people saying, oh, that's not my bit, or that's not my bit. I heard actually one of the federal ministers on radio this morning saying, oh, that's a state issue. I think people are sick of that as well. That territoriality, meaning that everything's a mess because that bit of it's not mine, will be more and more challenging across sectors in the use of data, in the positive use of data, and in the predictions that help people live their lives better as well and make better choices.
Yeah, I'm encouraged by what you say actually about needing to connect all the dots between all the different people, because I guess actuaries are the most unbiased people around. We listen to the evidence and then we change our minds. It's a good thing to change our minds rather than being entrenched.
Although
So
that also
hopefully-
is going to be challenged, I think. So I heard in fact, in the intro as well, about health data. And, actuaries have been guilty in the past, may I say, of interpreting health data in a, what some would argue is a biased way. And yet the capacity for individuals to have DNA sequencing, to know what their likely health outcomes are going to be, does that mean they become uninsurable as well? Or that, there's something about... and there was always an argument about the data that was used for everybody was men's data, not men's and women's data, and it turns out that the health outcomes are different for men and women. So there's still, you've got to unpick all your biases, because there is sometimes, this is a universal data set, but in fact the data set is based on this group of people over here.
That's right. So it's quite important that we use data for good.
Yeah,
So,
and in Indigenous data, of course, I know some of the superannuation funds are grappling with the fact that Indigenous superannuants want access to they want to retire early because their life expectancy is 20 years below everybody else's, but it's treated the same way once they're in whatever the system is that they're in.
Yep.
Yeah.
Yep. So now that we've pivoted to talk about disability, you've been very open about the impact your son's disability has had on the way you view the world. In our audience today, we have quite a number of people, of actuaries working in the space, in disability insurance and the NDIS and so on. What would you like to share with them from your lived experience? How do we do things better? Has it all worked?
Well, I guess, honestly, the world of disability has transformed since my son was born, which is a long time ago now. Nick's in his mid-40s. But he was born into a world where the data said, all the data was based on institutional care of people with disabilities. And so the expectations for him were virtually zero. And yet he's been through normal primary school, needed to go to special school at high school, although did a bit of a hybrid, has worked his whole life with some support. And so the expectations and his life experience are completely different. He does qualify for NDIS. I was part of the Productivity Commission Advisory Group for NDIS, or NDIA and its establishment. I think a lot of the establishment lost sight of the intention. And so I'm sure there's a huge number of issues that people here are dealing with, which is why the cost blowout is so extreme. Politicians can't bear to say no. The scheme was designed for a particular cohort of people with lifelong disabilities, not for people to drop in and out, not to mop up the aged care system, not to deal with every disability that seems to be over-diagnosed in the last 10 years or so since the scheme came in. So I think there's a huge challenge in this space, which is if you put a pot of money in the middle of a room, everybody works out how they get to it, whether that's what it was designed to do or not. So I think that's quite a big challenge at the moment. I think the government will wind it back, and I think they should.
Okay.
And everybody knows examples of abuse. People who've had lifts put in their homes that suited somebody in the house, but not the person with a disability. You know, there's so much that's going on that's terrible. And what it does do then is it limits the opportunity for the people for whom the scheme was properly designed. Anyway, my experience of it leads me to three things. One is I do think you need the nuance when you're thinking about the community we serve. Yep. And the fact now I think the data says 20% of the community have some sort of disability. Whether that qualifies them for NDIS or not is the moot point, I think. The second thing is that people with disability have expectations, and as do their families. So I came into the disability space completely unprepared, young, optimistic, and at every milestone I've had to fight something. Getting Nick into primary school, actually started with kindergarten, getting him into kindergarten, because the teacher said we don't take kids like that here, getting him into primary school, getting him into high school, getting him to work, changing cities. We've changed cities 3 times, so he's had to find jobs in 3 different cities. The systems are completely different, and the services are completely different. So the lack of coherence around Australia is also problematic, and there aren't that many voices other than individuals making a noise for themselves, or service providers who are largely trying to generate revenue. And again, there's not that many data voices, I have to say.
Okay.
And so the voices that should be able to pull together, maybe there's a little bit more coming through now in terms of the rates of, so-called of autism, for example, or spectrum disorder diagnoses has gone from 1 in 30 kids 10 years ago to 1 in 3 boys now. I mean, something ridiculous, which you can see is a weird failure of the medical model.
Yeah, that's a good paper I'd like to call out that was written by one of our members, Matthew Ranjan.
So I think that
that
data does then help have the questions asked, because the data then says, well, why is that happening? Where is it happening? And the pressure then that puts on your end systems like NDIS is huge. But also there's something problematic at the front end of that, where suddenly the way doctors are being taught to diagnose is completely changed, obviously. Or they're bowing to pressure from parents who've got difficult kids. Who knows?
What about the products that are out there, like health insurance products and so on? Do you think they're suitable?
Look, I think health insurance also still suffers a bit from everybody's the same. Yeah. So, you can get a high-end product that covers you in hospital for everything, or you can get a basic product that covers you for something else. And if you're under 30, you don't have to have this. And if you're male, you don't have to have pregnancy. And it's got a bit of nuance, but it's not a very nuanced product. Okay. And it's really, and it's hard, honestly, health insurers, sorry if people here from health insurance, but the way stuff is advertised, the lack of nuance in the way things are advertised, because most people now go online to have a look, like what's in it and what's not. Can you make any sense of that? And health insurance has become like basic banking products, which banks have had to sort out, which is there's about 100 versions of the same thing, really.
Right.
That every product manufacturer, you've got too many product manufacturers, which banks did as well. So a mortgage product, which is essentially, can I borrow enough money to buy my home? We ended up with, I think, when we did the product review at NAB a few years ago to strip this away, I think we had like 50-something versions of what was basically the same product with a bit of a feature here or a tiny feature here. Most customers didn't use those features at all. They didn't even understand them. At a point in time, that seemed like a good idea to try and get people in our door versus another bank's door. And so you end up with product complexity that staff themselves working in the bank don't understand. Certainly customers don't understand. And then when they go to claim, someone says, oh no, but that product you bought didn't have that, which you now say you want. It's like, well, how would I have known that? And so I think that's the pushback on lots of insurance now is because the complexity that's being created in the name of customer actually has worked against customers when it comes to it. And that complexity is adding cost to insurance because managing in banks, we start stripping it away because of the cost. How do you manage that many products sensibly? You just can't. You've got to have a system for every customer is on a system that's got that bit of the product feature on it. And over time, it just makes no sense.
Yeah, so what you're saying is the challenge is to both reduce the number of products and simplify, but at the same time have enough nuance so that it really serves the customer.
And actually just speak to people clearly. Now, get back to our AI conversation. We did an experiment on writing letters to customers in a bank context. And the AI-generated letters were better than our generated letters. Why? Because they spoke in the language of the customer. They hadn't been legal to death. They printed them out on a font that most people could actually read. And so we did it also with product disclosure statements. And product disclosure, who reads a product disclosure statement?
Put up your hand if you do.
Yeah, probably you do.
This is the audience that would read them.
If you ask general customers who has read their PDSs, virtually nobody. Firstly, they're in 3-point font. Secondly, you lose the will to live after page 10. And thirdly, they're in language that is completely incomprehensible. If you think, I think the latest data says that most Australian reading capability is like grade 6. And we write stuff in the legalese of a university professor. It's just that disconnect. I think, so, they're the challenges. They're going to come at us not in ways that are about the big value adds, although that could happen, but actually a lot of this little stuff is just going to get unpicked and unpicked and unpicked. So all of us do product disclosure statements because of legislation, because of privacy and because of this and because of that, but it's now gobbledygook. And so at some point, we've got to go, let's roll this back and work out what are we trying to do. We're trying to tell customers what they get from this product in a way they understand and makes them feel like we're doing it in their interest and they're getting value for the product. In reality now, it's got completely bastardised and has ended up as a piece of legalese that nobody reads, and then customers are really unhappy when they think they've got something and they haven't. And we say, didn't you read your product disclosure statement? The answer to that inevitably is no, I did not.
Yeah. So deeply understand your customers' needs and present things clearly, simply, and something, a product or whatever it might be that really
And AI
really
writes
speaks
better
to them.
letters than we do.
Oh dear, we don't want to end on that. We've just got a couple more minutes. So let's end on a bigger and live better theme. So I think I'll just end on something a little bit more personal for you. You seem you are moving at 1 million miles an hour, and you have so many interests and so many things going on. How do you take care of your own well-being? And stay mentally fit?
It's probably not a good time to ask me, given I've just moved house.
Oh. We'll change the subject then to another one.
Yeah, they say it's as stressful as just about having someone die around you, and it does feel a bit like that at the moment. So how do I do it? Look, I'm optimistic, and I have a sense of humour, which I think you cannot take yourself too seriously if you want to optimise your well-being, because if you do, then you're dead, really. I garden, because I think sticking your hand in the soil is good for you, and watching things grow and understanding the way the world works, because then you watch the weather as well as your plants and other things. It's joyful. I read because I'm interested in the world, and I think when you lose interest in the world, then you lose perspective, and reading does give you a sense of, I don't know, space, place, history, other people's experiences that are really different to yours as well. And then finally, we've moved back to Queensland, which is my house move. And apart from my desire now to completely reform the building industry in Queensland as a result of a renovation,
we've got some members there doing that as well. So
I'm back closer to family, and well, that has pluses and minuses. There's a sort of energy and camaraderie, and we were talking earlier. So family for me isn't just blood relatives, although I've got armies of them here in Queensland. I've got very old friends and extended families that don't have any direct kinship relationship to me, but I've had relationships with them for a lot of my adult life or a lot of their adult lives, and there's great value in that sense of whānau, which is a much better word that the Kiwis, a Maori word
family
that
and community.
that takes. So I often say we're like a white Aboriginal family here in Australia. We've got family who have no relationship to us by genetics, but who are as important as our kinship. A direct
Thank
kinship
you.
group.
So
So there's great value in that.
that's a great way to end. Put your hands in the dirt, read, and community.
Yeah.
Build community around you. Please thank me. Sorry, don't thank me. Please join me in thanking. Please join me in thanking Anne for a very insightful discussion. Thank you. I'll now pass on to Naomi Edwards, who will be leading our plenary one. Thank you.
Good morning, everyone, and welcome to the first plenary of the day, which is Life and Income Insurance, the protection in danger of being left behind. I'm Naomi Edwards, a very proud life insurance and superannuation actuary, although today I work pretty exclusively on company boards. So it's a long time since these tired old eyes have actually sat in front of a spreadsheet. But for me, today's discussion about the roles and the risks for our life insurance industry will really bring me personally full circle. My first job as a 20-year-old was calculating group life insurance premiums. And today I sit on the board of a company providing group life insurance to 4 million Australians. When I was 20, I was pretty, I had tickets on myself. I thought I understood everything there was to know about life insurance. I could design a product, I could price it, I could reserve it. But what I've realised now is there was a massive chunk of knowledge missing, which was actually the understanding of the impact of life insurance on the customers, but also the impact of what happens to a family when they don't have life insurance. And this has taken me decades, actually, to figure out what is that crucial role. This morning we want to talk about sustainability and access to life insurance with a human as well as a financial face. And we want to talk about the risks of life insurance becoming out of reach, because we have talked a lot in this morning, David, and everyone's mentioned about sustainability of general insurance, of property and so on in Australia because of climate risk. But there is a quiet challenge facing the life insurance industry as well that we really want to focus on. We have an incredibly high-powered panel who have agreed to come and speak with us today, and I think it's actually a testament to the crucial role of the actuaries in the audience, the role that we play in this industry, that we have our industry leaders here today to talk with us. We have APRA Executive Board Member, Suzanne Smith. Welcome, Suzanne. Brett Clark, who's the appointed Group Chief Officer and Managing Director for TAL, Australia's largest life insurer. And we have Phil Fraser, who is the CEO of Q Insure, which is Australia's first life insurance company to be owned by a profit-to-member fund, ART. And it's fantastic to have these speakers here. So please actually give them a big clap for coming and speaking with us. So the order of today is that each of our plenary speakers are going to speak to you for about 10 minutes each, although I suspect there's going to be a little bit of fluidity in that. And then I will ask some questions of each of our speakers for about 10 minutes. And then we want you guys to flood us with questions through the app. So we're really hoping to have a very engaged dialogue with you. You've got your regulator here, you've got your competitor or competitors or potential clients here. So this is your chance. Ask questions, give opinions, jump in. There's going to be a lot to unpack. So thank you very much, and I'll now call Suzanne Smith to the stage. Thank you, Suzanne.
Thank you. Thank you, Naomi, and good morning, everyone. It's certainly a privilege to be here today and to join the panel with Brett and Phil. Naomi's and the Actuaries Institute asked me today to set out some context as to how APRA views the life insurance industry in Australia today. The theme of this summit, Think Bigger, Live Better, challenges us to envisage a thriving insurance industry that supports the well-being of our society. Drawing upon this optimistic and forward-looking theme, it's worth reminding ourselves of what it means when our communities are supported by a strong and sustainable insurance industry. For individuals, insurance protection translates to a life with fewer worries. It provides financial support in times of accidents or disasters and safeguards us from those unforeseen events. Insurance offers the confidence to embark on adventurous travels, pursue entrepreneurial dreams, and find that peace of mind knowing that your loved ones are protected. A thriving insurance industry also bolsters the broader economy. It promotes financial stability, it fosters consumer confidence to spend, and it instills greater certainty for business investments, and importantly, supports financial markets through the investment of insurance premiums. When we look at the numbers, the industry is fulfilling its foundational requirements, providing a safety net in the face of unexpected events like death, disability, and loss of income. In 2022 alone, life insurers paid out over $11 billion in claims payments to around 85,000 Australians, a powerful testament to the industry's impact on community resilience. Life insurers remain well capitalised in line with APRA's requirements, so policyholders can be confident that their insurer has the capacity to pay valid claims. For the life insurance industry to go beyond its foundational level and to thrive as a stable pillar to community confidence and economic growth, the industry must be able to adjust and innovate to meet evolving consumer needs, allowing more Australians to understand and access valuable insurance. Like you, APRA values an industry with a deep understanding of the societal trends and risks that we face today, an industry that designs products fit for purpose and is adaptable to meet changing consumer needs, one that places the right solutions with the right customers, matching individuals with the most suitable protection, and an industry that builds long-term trust through product, pricing, process, transparency, as well as responsiveness. This will help consumers understand their policies and have the confidence that the promised solutions will be there when it matters. Such a thriving insurance industry in a market with healthy competition would empower both individuals and the broader economy. As will be discussed over the next few days, there are many challenges in the industry that demand our attention. New retail business sales have dropped more than 50% in the past 5 years, and now for every new policy coming into force, around 3 are lapsing. Complex products and a declining number of financial advisors, down some 43% over the last 5 years, leave many consumers struggling to grasp both the value and scope of their coverage. The industry's long-term sustainability has also been questioned due to some pricing practices and legacy product design. Product innovation has not kept pace with societal, demographic and lifestyle changes. Our workforce today is much more diverse and fluid compared to the one that the products were originally designed for. The pandemic has also increased mental health concerns, particularly for our young people, and in addition, our society is ageing. Unfortunately, consumer trust in the industry has also eroded, driven not only by outdated product design, but also by negative experiences with fluctuating retail and group premiums, poor claims processing experiences in the group space, along with a confusing array of products. And of course, external factors like rising interest rates, the cost of living pressures, are exacerbating the trend for people to opt out of insurance, particularly when premiums are rising. So while these challenges are significant, they do present opportunities to rebuild relevance and trust within the community. I would like to emphasise APRA's support for diverse and innovative thinking by making the following points. Firstly, insurers have the opportunity to create innovative products that are adapted to today's demographics and risk profiles. The need of the ageing population for quality retirement solutions, for example, offers immense potential. Products and services can be significantly improved to empower retirees to spend their savings confidently, enabling them to participate more fully in life. Additionally, growing levels of mental ill health require coverage solutions to address this previously neglected area. A recent study shows that over 40% of adults have experienced a mental disorder at some time in their lives, and young people are now particularly at risk. Many will have pre-existing conditions when they seek out insurance, and in our current model, they face higher premiums and either partial or, in the worst case scenario, total exclusion from cover. Secondly, when creating these innovative products, I encourage you to take a holistic view across the insurance offerings and consider how insurance links with social security provisions like workers' compensation, NDIS, aged care and healthcare. The industry should look to develop comprehensive protection bundles to simplify navigation of the insurance landscape for consumers. This involves asking critical questions around the ideal protection package, identifying coverage gaps as well as overlaps. My third point is that the industry can increase transparency around risk assessment, product design, pricing, sales and claims processes to help rebuild trust. Consumers need a clear understanding of their coverage so that they can feel confident in their insurance, not just left hoping for the best outcome in the face of disaster. The industry can embrace the design and distribution obligation as well as the target market determination to better serve consumers. And finally, it's important to tap into data and technology to enable these ambitions. Used thoughtfully, carefully, and with the appropriate guardrails, data and technology can unlock a deeper understanding of consumer needs, their behaviour, and ultimately enhance consumer outcomes. We recognise that building a thriving industry requires a united effort from all stakeholders: insurers, industry bodies, government, financial advisors, along with consumer groups. Through collaboration, we can identify root causes, address structural deficiencies, and design solutions that meet the evolving needs of the community. In an industry where new business is falling and parts of society are already underinsured, it is time to think bigger and work together to grow the pie, not merely fight over a shrinking slice. Fortunately, some positive system-wide initiatives have already made progress, like the industry's response to APRA's IDII intervention, the ongoing clarification on how genetic test results can be used, and the more recent investigations into the role of TPD insurance in modern society. These examples demonstrate the industry's commitment to collaboration and adaptation. I remain confident that we can rebuild a thriving industry, and as I look around at all the capability in this room, I call upon you to face those challenges head on. Because of product homogenisation and fierce price competitiveness, life insurers have historically been reluctant to be first in terms of product development. But there may well be opportunity in embracing the first mover advantage to develop products that truly serve a changing community, build reputation, and establish market leadership. The industry has built some muscle through the IDII experience. To improve sustainability, it is time to employ this strength and apply the learnings across other product lines, like TPD, for example. Although there are no quick fixes and experimentation is required, we encourage the industry to focus on community understanding, community coverage, and community outcomes, which in turn will foster insurance sustainability. So in wrapping up, I'd like to leave you with these thoughts. Think bigger means to develop a system-wide understanding of the challenges and cooperate on solutions, not just within your industry, but engaging the wider ecosystem. Think bigger calls for increased transparency to empower consumers to make informed decisions and, importantly, to rebuild trust. And think bigger means taking initiative to develop future-fit products by anticipating emerging trends and considering the protection bundle. Study the broader social and financial impacts on our communities and be bold and innovate. A new generation of customers awaits engagement. Retirees need your product expertise, and importantly, new technologies offer opportunities. This conversation today marks the beginning of the Think Bigger, Live Better journey for the life insurance industry. Let us work together to solve together and write that next chapter. Thank you.
Thank you for those words, Suzanne, and some key messages in there around a call to action for the industry. Before I get started, can I just say I'm really happy to be here today. I haven't been to an actuarial conference for a number of years, and Naomi, thank you very much for the invitation to come back. I'm really happy to be here. I've been a life insurance actuary for over 30 years, remarkably. I haven't been on the tools for all of those 30 years, but I very proudly still call myself an actuary and it means so much to me to be an actuary, and I'm really glad and happy to be here. So thank you for the invitation again. This session asks the question about life insurance and the danger of being left behind, or life and income insurance and the danger of being left behind. And I'm going to explore this question in the next few minutes. Over recent years, we've seen a generational and permanent structural shift in the Australian life insurance industry. This period has been characterised by a series of material regulatory reforms that commenced both before the Royal Commission and after the Royal Commission. Some deep financial sustainability issues in some product lines, and the rapid consolidation of the industry to life insurance specialists. The industry today is almost unrecognisable from where it was 5 years ago. And while it's been a challenging set of circumstances for many of us to navigate, there is no doubt in my mind that there are benefits for customers and also benefits for the industry coming out of this period. However, I think there's also reason to pause, and Suzanne touched on a couple of these points. In terms of customer access and customer reach to life insurance products and services, what have we seen? We've seen a fall in sales of life insurance with in excess of a halving of individual life insurance sales to new customers, reflecting a halving of advised life insurance sales and a collapsing of sales in the direct market and also through banks. Alongside this, an ageing and increasingly anti-select and declining population of insured lives who over time quite rightly reconsider their need for life insurance. And then alongside this, a reduction in lives insured in the group insurance market of around 20% due to legislative changes. So through these times of rapidly decreasing customer numbers, the industry has largely managed to tread water on premium volumes, a direct result of pricing increases to new and existing customers. However, that's no way to grow, or in this case, barely maintain a business or an industry, and more importantly, build deeper engagement and trust with customers and community. So while there have been benefits in the changes that we have been through, it has not been a cost-free period in terms of access and affordability for life insurance for customers. And I think one of the things, perhaps a small thing we can do together, is reorientate how we think about growth and success by focusing more on customers and simply focusing more on customer numbers rather than dollars. As a leading financial services CEO, not life insurance, recently remarked this week, and the other cost is social equity, because what's happening is the rich have access to all these services. And it's not just the poor. It's actually the middle that are missing out today. Underbanked, underinsured and underadvised. So a growing industry is a sustainable industry and a healthy industry for customers, for insurers and for all stakeholders. And the reverse is also unfortunately true. So when I reflect about these changes and I look further forward, I have a different question which worries me most. Are customers in danger of being left behind? And so, should we worry about this? I think we should. I hope you agree. Do we need to do something about this? I think we do. I hope you agree. The question is, what do we do about this? And that's a little harder. Unfortunately, there are no easy fixes, no silver bullets, and any set of solutions will take time. However, maybe part of the solution requires all stakeholders in the industry and around the industry to think a little differently. And where do we look for inspiration? Where do I look for inspiration when I think about how we solve some of these wicked problems? Well, maybe in this instance, rather than look forwards to the next innovation or the next new product, we can look backwards. And the origins of this very noble industry, which I'm very proud to be part of, was built on mutuality. And what is mutuality and what does it mean to me? In its simple form, it means the way we think about how we manage the business for all our customers, today's customers and also tomorrow's customers, for the long-term benefit and sustainability of all our customers. How we manage the business for the benefit of customers who claim and need us so desperately when they're going through their most difficult days. And also those customers who don't claim, who need us to continue to show value and provide products which are accessible and affordable. Understanding that decisions we make for one group or one cohort of customers inevitably and in time, one way or another, impact all customers. Simply managing our business in a way that is fair and equitable for all customers. So while the life insurance industry is no longer mutual in the strictest technical definition of the word, the principles of mutuality still run deep in what we do, I believe, and are as relevant today as they have ever been, and maybe even more relevant and more important than they've ever been. Perhaps it is through the prism of mutuality we can think about long-term sustainability of our industry, rather than solely through the prism of a product, and then ensuring we do our best not to leave our customers behind. However, adopting a mindset of mutuality is simple to say, but it's harder to do. It requires long-term thinking, data to be analysed, uncertain future outcomes to be assessed, fairness and equity to be assessed across different customer cohorts and generation of customers, and astute judgments to be exercised. Do some of these skills sound familiar to people in this room? I really, really hope they do. The actuarial profession's role as arbiters of fairness and equity is centuries old, and today actuaries involved in product design, pricing, reserving, capital management, finance, strategic and corporate roles, even sometimes executive roles, all contribute to ensuring the equitable and fair outcomes for all customers. And as a profession, you all are exceptionally skilled, exceptionally trained and qualified to guide us in managing our business, which is fair and equitable for all of our customers. So today I encourage you to continue to be a strong and learned voice within the industry and within your individual businesses. I've really been pleased that recently there have been some notable and really valuable contributions from the actuarial profession to some really challenging and complex issues. The Institute's sound positions on IDII, and more recently, the Institute's contribution to the genetic testing discussion. I believe the profession brings a credible and authoritative voice to complex issues which require a mindset of mutuality to balance the needs of different cohorts and generations of customers to ensure fair, equitable and sustainable outcomes for all customers. So in wrapping up my comments today, as actuaries, I believe you, we, me, are all in a unique position to guide the businesses we work in and the broader insurance industry in ensuring good customer outcomes. And I encourage you to keep being that voice and maybe even dial up the volume a little bit. I encourage the profession to be a strong and learned voice in important advocacy and policy work, bringing a keen eye on mutuality as a prism through which we make good decisions for today's customers, those that claim and those that do not claim, and also for tomorrow's customers, and help us and your businesses to rise above the complexity of the day-to-day and focus on good long-term decision making. If we continue to do that, and we do more of that, then I believe we'll be better placed as an industry to ensure we do not leave our customers behind. Thank you again for the invitation to come along today, and I look forward to the panel questions. Phil, over to you.
Well, good morning, and thank you. First of all, thank you to Naomi and Brett, Suzanne as well. It's an absolute privilege to be here. As As the only accountant here, I think it's incredibly intimidating, so try and bear with me. Of course, I've got slides. So the first thing I'd like to talk about, and I won't talk to all the slides here today, but first of all, who's Q-Insure? Now, Q-Insure has a heritage which actually is over 25 years old, and it started with the Queensland government. It established provision of insurance in 1995, and then provided the products more generally in 2000. And there was a change in regulation in 2015 that then triggered 2016 of Q-Insure being established. So we actually we have an independent board of non-executive directors, and then we consolidated with what was Sunsuper to create Australian Retirement Trust. So that consolidation means that we are now part of ART, and it is talk about mutuality, incredibly important, and the membership of ART. So we look after part of that, which you see here. Q-Insure looks after the government division. Big responsibility. We take that, and of course, with the merger, we now have the public offer as well, and there is a mix of business and corporate. So it's a multi-insurance model that exists in ART. Works well, but not without its complications. And it takes me back to insurance within super. I've been running the company for 6 years. It's an incredibly privileged position for me to see, and I'm constantly learning. Insurance within super, the heritage is about trying to protect the retirement balance, trying to bridge that gap between when you finish work and your retirement income. But it's a balance between ensuring that people can have that safety net and accessibility. I strongly reflect on the words around mutuality. I think that's one of the major benefits of group insurance, is that there is that affordability and access for people there. For Q-Insure, our focus is similar to the industry. We are a standalone captive, but nonetheless, we are focused on the health and well-being, product design, regulation, and all of those things that affect the rest of the industry. We're constantly learning from, we have to be a part of, and a constant investment. Investing significantly as a sole client focus for the government division in all the technology, data, claims, underwriting, etc. It is a significant investment, but with it, the benefits obviously coming through. One thing I do like about, well, I love actually about being part of ART, is that there's a very clear focus. We speak a lot about customer, member, and we know that the trustees of ART have a singular focus, and that is the member's best financial interest test. And we live and breathe that every day. So we become a part of that. And yes, we've got that sole focus on one client. That, of course, brings with it its risks, as you don't have the scale and diversity of some of our other colleagues. But there's a number of things under it that we have to commit to support that test, and you'll see them there. Again, a single client focus for us in ART means that we have a pretty complex balance as well between employers and members and trustees and, of course, shareholder. And I know that many people say, how do you balance the member and the shareholder perspective? And, you know, that has to be incredibly well governed and thought through. We actually have a shareholder committee of the board who look over the shareholding elements of Q-Insure, and there's a member outcome committee who also do that. And then, of course, we have the non-executive board of Q-Insure to manage it and run the life insurer. So there's a lot of infrastructure around running Q-Insure. But again, our focus is on supporting members, supporting employer groups, and trying to do the best we can as a life insurer. We operate in a highly competitive environment, and we take nothing for granted. So we need to make sure that our focus is incredibly well on ART as a group. Again, the heritage of over 25 years, it's been a privilege to be able to service Queensland Government. And I think being part of Q Super, it actually gave you a special connection to the Queensland Government and access to them. We actually have built up employer relationships, and we have, very deep access into that employer groups with HR departments, with the senior representatives in those government agencies. And that, again, don't take it for granted. That has been something that's been built up over many, many years, and it's something we protect incredibly deeply. So that's all about trying to look after the member, the claimant, and I spoke about before, providing value back. Thankfully, that has been recognised, and we are starting to come through. Again, one of the things about retirement income in the superannuation fund is obviously trying to get people back to work, trying to contribute to that income stream and that retirement balance. At any given time, we have in the government scheme about 3,500 people on income protection. So it's a fairly large book for us for a standalone insurer to manage. And one of our objectives is obviously return to work. And thankfully, we have a fairly decent rate on return to work, and that's through that partnership program. Again, I spoke about governance as part of the group. One thing that was a tough one for us to undertake recently was SPS 250. But I must say that the learnings from it and that continuous improvement is one that we've embraced. Part of being a captive insurer is that we have to have an independent certification under SPS 250. So that means that a third party has to come in and actually validate that we have satisfied, and in fact the fund has satisfied all the conditions. So as you can imagine, that was an incredibly interesting process to go through. And yes, there was things that we had to learn from, but I think that's the benefit. So it's about embracing that, and that of course happens on a triannual basis. So looking forward, the market's changed dramatically, both on the insurance side, but also on the super side. Big consolidation. I think the takeaway for me on this is that we can't be all products to all people. Even within ART, there are multiple significant employer groups, the public access, the government scheme. So, that we have to think deeply about what that future sustainability and service model looks like from a superannuation fund, the life insurer, and how we can, best support the group from that perspective. It seems to be slowing down a little bit, but, I think it should progress. And of course, the big theme is around retirement income streams, and that is one that I think is a wonderful opportunity, an amazing opportunity for everyone in this room and the industry and the super side and everyone else to think about that solution. We have a world-leading superannuation system. Well, we need to do a lot better on retirement income. There are some really good products that have obviously been released, and people are very focused on it, but it is a big responsibility. Accumulation's been fantastic, but we have the opportunity in front of us to create that entire whole-of-life income stream when it comes to retirement, and that's ultimately why people are saving. So we hope to be able to contribute to that as part of Q-Insure. People are working longer. It will change over time. The retirement phase will change. The products that we need to provide will change. But I think all of us here today are uniquely placed to help in that. So wrapping up, we are, again, the only captive insurer, and we are young, but the heritage, and I'm very thankful to everyone that went before us. We've been around for a while, and I think that it is always the member's best financial interest test from a life insurer perspective. Transparency, trust is something that we hopefully bring. So for that, I just want to say thank you again for the invitation to speak here today, and I look forward to the Q&A. Thank you.
Thank you very much, Suzanne, Brett and Phil. That was very interesting. I'm going to do the first question to Brett. Brett, Suzanne said that we need to innovate because the external environment has changed so drastically, in the sense of people move jobs all the time, mental health is such a big issue. Those are massive changes, but when I look at the rate of innovation in the life insurance industry, to me, and notwithstanding, you and Suzanne both mentioned the changes, it's compared to the rate at which a tech company changes or a Woolworths changes or anyone changes, it's glacial. Mm-hmm. And do you think the barrier is that we're intermediated and that there are just too many parties and that some of those parties are slow to change and it's hard to change advisor behaviour or platform behaviour or trustee behaviour, and to line them up just becomes too difficult? Is that what's going on here?
I wouldn't describe the challenge as being that the industry is too intermediated, either with the financial advisor or some other party. What I do think about, and let me just say it and endorse fully Suzanne's comments around that we do need to innovate around product and reach our customers with new propositions. There's no doubt about that. I think the challenge we face is multifaceted around how does product work together with distribution. We're at TAL, we're looking at some of these new markets and new opportunities today. To actually develop the product is a relatively straightforward thing to do. But how you take it to market and work with distribution, work with technology, and ultimately have confidence that you can take a new product to market to a new segment which may not be using a financial advisor and or may not be accessing insurance through a super fund, and how you can take that proposition and confidently take it to market and generate scale. If you cannot generate scale, then you are left with another problem, and that is more complexity in your business. And everyone in the audience today would understand that. So how product works with distribution and how we can confidently scale is I think the bigger, or the big challenge and the big opportunity really. If an insurer or insurers can crack that, then we'll be back well on our way in terms of solving some of that growth challenge I talked about earlier. The scale question is important because scale is critical in the Australian life insurance market. Perhaps some people would expect me to say that. I believe it to be true. I also believe that complexity is the handbrake on the entire industry as well, and presents itself in so many different ways. Speed is one, operational risk is another, cost is another, which ultimately ends up with the customer at some point or another. And so all of those things and how they come together, I think, is the nut we are trying to crack. And clearly technology has a huge role to play in that. If I could put in a plug around trying another part of the puzzle which would help solve this, is if we could deal to legacy product issues. Because then, from a TAL perspective, I'm constantly asking the question of people around scale. If we're looking at these new propositions and new models, can we scale them? And because I need confidence that if we do go to market with something new, that I can deliver a scaled solution, I'm not left with another small piece of legacy that I can't do anything with. So the two things really go hand in hand.
And does that require legislative change to be able to deal with the legacy issues that are holding us back?
It would help, there's no doubt about that. It's not solely a regulatory or legislative response, but that would certainly help for sure. Yeah.
Thank you.
So the things go together. Sorry, that was a bit of a long answer. Yeah.
Suzanne, you talked about the industry needing to be more transparent with its customers, and I caught Anne Sherry talking about the fact that AI-generated PDSs actually communicate in normal language. Is that the kind of thing you meant by transparency?
Well, I think it is, and I think if you draw on a couple of the points Brett just made around the ability to get scale and the issue with distribution, a lot of it comes down to transparency and understanding, and how do you build trust. So for us, transparency is about consumer understanding, speaking in a language that they understand and what really matters. When I joined the life insurance industry back in 2016, I honestly felt like I went to a foreign country. It was a different language. There were words that were completely new to me, particularly, or words that were familiar but used in a context that I didn't necessarily connect to. And I think that there are so many of us that, you know, start to speak this language, forgetting that we've left a lot of people behind.
You thought that level premium meant that it didn't go up,
I
right?
did think that level premium meant that it didn't go up.
Crazy.
So did a lot of other people.
And I think it is that we start to drink the Kool-Aid a bit and start to forget that the financial literacy of most Australians is very, very low. And the complexity in terms of really understanding what is the cover that I have, when will that work for me, in what situation, what are the factors that are driving my premiums, how can I have any influence in whether they're going up or not. Everyone's asking me for a lot of data and information, but I'm really scared of letting out my data now, and so how is that being used? And then when at claim time, particularly in examples of TPD and things, it takes a long time for those results to actually land with a consumer. So keep me informed, and can you just help me along the way? And I really, think about when you're facing challenges like distribution and scale, and we don't want more legacy product issues because people are trapped in products for a whole range of reasons that now aren't necessarily delivering the best outcomes. Starting with simplifying communication, really being confident to speak to people in the language that they understand, hopefully means that when you are trying to distribute, people start to go, actually, I understand that. That's good. I can work that out on myself. I don't need to go and pay someone to help me. So I think some of the challenges that Brett is talking about, they won't be solved because we know there is no one solution to it, but they will certainly be helped if we can sort of have the confidence as an industry to speak and be more transparent around what we mean by things to get that growth.
Great, thank you. Phil, Suzanne mentioned the statistic that I think there's been a 20% decline in the number of Australians who have insurance through group super. And a lot of people are talking about the importance of being able to grow sales of, individual retail insurance, but through a group super environment. Is that something that Q-Insure is seeing, that your members are taking up voluntary cover within the super fund? And is that something that's easier to do if you're a captive insurer, or not easier?
Yeah, look, it's a great question. So the reduction obviously was driven through the legislative changes over recent times, and there was good reason for that as well. I think there are some aspects that we're still unpacking or discovering after that event, but that's normal. I think I would take it back to financial literacy and the distribution and the low levels of financial literacy. I think for Queensland Government, probably not unexpected, the levels of cover and default cover were incredibly high, are incredibly high. And so we have default, death, TPD, income protection, some of the highest levels. Of course, that's the trustee design, not the insurer design, but nonetheless, that's what they've had. So there hasn't actually been a need to uptake or move up over the years. So there's a very high take up rate. I think part of the challenge, if we look at the take up rate, is that we have to balance really carefully the erosion of retirement income with the cost of the provision of the insurance, and that's something that we have to take, and the trustees and the insurers have to work together on, right? Because it has to make sure the member is at the centre of what we're doing. The financial literacy is a challenge. But one thing I do really believe in, after running a private health insurer for a number of years as well, is that, you know, something in the industry that actually, I mean, it's default insurance in super. So the literacy issue was not necessarily there, as long as we were advocating and doing the right thing as an industry. The member had the cover through default. So for private health insurance, there was an incentive through legislative means for people to take up private health insurance as well. So I think that's part of what we've got to reflect on.
Great, thank you. Well, we've got about 10 minutes left and we have quite a few questions coming through. So thank you very much. A lot of them are about technology, which I think is not surprising. It's really open to anyone, but how could technology be leveraged to innovate the alternative distribution channels? And what critical elements or changes would need to be made to actually push forward technology at scale? Brett, do you want to jump in?
Yeah, we talked a little bit earlier, Naomi, about intermediation. Actually, perhaps a better way I could have answered that was when I think about how life insurance is often accessed in Australia, but actually in most global markets, it's usually as part of an ecosystem. So through financial advice, that's generally a financial advice ecosystem. Group insurance is a classic example of that. Back when banks were providing life insurance to their customers, that was typically part of a broader conversation, a broader package of financial services. So life insurance often is not purchased in its own right, but part of an ecosystem of financial products or an ecosystem of in a financial advice sense. And so in any ecosystem, how technology connects different parts makes it transparent, to Suzanne's point, but makes it efficient for customers and different parts of the ecosystem to play. That is absolutely critical, because nothing frustrates a consumer of any product more than if it doesn't work well, if it's clunky, if the different parts aren't talking well to each other. So if you buy that idea around ecosystem, then technology is huge in how it connects different parts of it. Super funds to insurers is a classic example right in front of us, and increasing confidence and trust with members and consumers, and ultimately that should support where we all want the industry to go in the future. So if there's one thing you could call out above most, that would be around how technology will play in that space.
And perhaps, Naomi, if I could just add, I think AI is a really interesting, thing that everyone's probably experimenting with in your own businesses. I think I used, appropriately, thoughtfully, and with guardrails in sort of talking about data and technology. And by that I mean, we know with AI it has the ability to introduce bias, which can actually introduce exclusion. And so I think it's really about thinking carefully about what that means for people. Are you actually inadvertently screening out those customers that may genuinely have a need for insurance as you think about adding technology on as a distribution channel? And we've seen examples of that in other countries through the GI space, where people are actually not even sort of being introduced to insurers as potential customers. So I think it's going into that, and I think this is where boards and governance around the introduction of new technologies needs to be thinking about, yes, it can speed things up, we can get greater scale, but what is the real impact to customers of introducing some of those new technologies?
And making sure that governance systems are keeping up with the technology.
Exactly.
We've got a question here about the superannuation group super sort of ecosystem, which you were talking about, Brett, and that it's an amazing platform to address the underinsurance gap in an affordable, scalable way. A lot of the people here are consultants and advisors to trustees, and the question is, how do we as advisors to trustees help them lean into the opportunity to grow retail sales within the group super fund, and be confident that doing that is consistent with the objectives of super, and that it's not somehow damaging, their brand as a profit to sort of let us in to be innovative about really upscaling additional coverage, say for the 23-year-old who has 4 kids. That happens in Tasmania, maybe not elsewhere, but that's really a thing, and it saddens me that those people have no cover unless it's through voluntary. So,
Do you want to go first?
did anyone
Sure.
can speak to that?
Sure, you comment as well. So I think the question, obviously the quality of advice review and that opening of for super funds and obviously for insurers to be able to advise, I think is a great move. Right? I think that is something that we have an obligation to make sure that our membership are protected and that's the first objective, if you like, for the members' best financial interest of trustees. So for us, I think perhaps it's a bit of an easier one to. I get that the trustees are grappling with it, but we have that ability to advise the membership, who arguably this is their single biggest investment that they hold on behalf of family and everyone else, and it is all about the protection of that. So I think the ability for, whether it's a group insurer, retail insurer, whatever, to play in that ecosystem is an incredible opportunity for the industry to make sure that we are, and the product itself, I think, is what it comes down to. Like, if the value, the design, the distribution obligations, and the product offering, and the oversight and of it, which it will be of the appropriate level and is consistently reviewed, then I think it's a big positive. I think that, that is a big opportunity for the superannuation space and for the life insurance industry. Brett?
Great, thank you. Did you want to?
I'll just add a couple of quick things. And Naomi, I can't help myself when you talked about the 23-year-old with four kids in Tasmania.
To be fair, I meant to say the 24-year-old with 3 kids.
Okay, right.
And which I do know. I don't know a 23-year-old with 4 kids. But anyway, just
That's important clarification.
that's an important clarification.
I can't help myself because with the regulatory changes, legislative changes that were made around group insurance a few years ago, very well intended, which I think all of us would fully support, there were some unintended consequences, and that insurance was removed from some of the people in our community that need it the most. That person in Tasmania with 3 or 4 kids. The most vulnerable people in our community who frankly rely on group insurance to meet their needs in a really desperate time because they don't see a financial advisor. They couldn't afford to, or maybe even would think about that, and they're not getting insurance offers anywhere else. So taking insurance away from those people, that made me really sad as part of the implementation of that. Although I would want to get on the record that the intent was right, particularly around moving insurance from duplicate accounts and those sorts of things. But there were some unintended consequences. More broadly, a very clear view on this, that the primary goal of superannuation is for people to save for retirement. And the superannuation system is not a primary vehicle for the distribution of life insurance. But we do know that not everyone gets to live a full working life, and when they don't, then life insurance has a really important role to play. But the primary objective, always in my mind, is that superannuation is to save for retirement. And then it's for trustees and others, consultants, to ensure that there's the right design with the right capabilities, and QAR is an important component of that with a base level of default, people can make good decisions about going up or down if they need more or less on their own. Yep.
I'll ask, there's another question here, and I'll open it either to Suzanne or to Brett. It's quite provocative. if product design is easy but distribution is the challenge, it sounds like we are designing the wrong product for the customer needs. Is the real risk ivory tower thinking rather than customer-centric thinking? So this is, I guess, saying if you were really designing a customer-centric product, they would actually buy it.
The horse would come to water.
The horse would come to water, but this is a centuries-old issue with life insurance. What are your thoughts about that, Suzanne?
Well, I think we are living in a new world with different technologies and different ways to access, and people are consuming information differently. People understand, in some ways, understand a lot more, they're reading a lot more, but that can be confusing. So I think thinking about what the customer needs, the nature of work, the nature of illnesses, the types of claims these days does need a rethink, and it does require someone to be brave and courageous and take a first step and, try something new. We talked about sort of this sense of, is there an opportunity for someone to be a first mover? And I'm really encouraged by a lot of the ideas that have been publicly shared by different insurers who are actually putting things out there, and they're not squirreling it away to say, well, I'll just keep it to myself. And so that sort of bouncing around to solve together, I think, is really important. But I think starting with the customer always feels like you can't go wrong. If you start with the customer in mind first, as opposed to designing something for a fanciful potential customer over there, as opposed to losing reality, I think that's a bit fraught.
Great, thank you. I have just been given the wrap-up now. Or you've got a sore throat? No, that was the okay. That was not
says wrap up
the
there.
sore throat. That was
Right now.
So it's been absolutely fantastic to kick off our discussion with this session about the challenges facing life insurance. And if you guys can stick around, or those of us who are, I know there are a lot of sessions coming up which will actually have the answers to a lot of these questions. So, yeah, but I'd like you to give a very big round of applause for our guest speakers, Suzanne Smith from APRA, Brett from TAL, and Phil from Q Insurance. Thank you.
Thank you.